Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 11th, 2025, and we're diving into Stitch Fix's second quarter earnings report for fiscal year 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Stitch Fix has been an interesting company to follow, especially with its ongoing transformation strategy. I'm excited to discuss their latest financial results.
Revenue and profitability overview. Let's start with the top line. Stitch Fix reported a net revenue of $312.1 million for the second quarter, which is a 5.5% decrease year over year. John, what are your thoughts on this revenue decline?
While the revenue did decline, it's important to note that Stitch Fix has been focusing on improving its client experience and product offerings. The gross margin increased to 44.5%, up by 110 basis points year over year, indicating better product margins and higher average order values. This shows that the company is managing its costs effectively despite the revenue dip.
And what about their profitability?
Stitch Fix reported a net loss of $6.6 million, but they managed to achieve an adjusted EBITDA of $15.9 million, reflecting their continued cost management discipline. This is a positive sign that the company is on the right track with its transformation strategy.
Client metrics and engagement. Moving on to client metrics, Stitch Fix reported 2,371,000 active clients, a decrease of 2.6% quarter over quarter and 15.5% year over year. How should investors interpret these numbers?
The decline in active clients is concerning, but it's worth noting that the net revenue per active client increased by 4.3% year over year to $537. This suggests that while they have fewer clients, those who remain are spending more, which could be a result of the improved client experience and product offerings.
So is this a positive trend for Stitch Fix?
Yes, it indicates that their strategy to enhance client relationships and offer more personalized services is paying off. However, they still need to address the decline in active clients to ensure long-term growth.
Financial outlook and strategic initiatives. Looking ahead, Stitch Fix has provided a financial outlook for the third quarter and the full fiscal year 2025. Can you walk us through these projections?
For the third quarter, Stitch Fix expects net revenue between $311 million and $316 million, with an adjusted EBITDA ranging from $7 million to $10 million. For the full fiscal year 2025, they project revenue between $1.225 billion and $1.240 billion, and adjusted EBITDA between $40 million and $47 million. These projections reflect their cautious optimism as they continue to execute their transformation strategy.
What strategic initiatives are they focusing on to achieve these targets?
Stitch Fix is investing in enhancing client-stylist relationships, expanding their product assortment, and improving operational efficiencies. They are also focusing on their freestyle channel and leveraging data-driven initiatives to boost performance. These efforts are aimed at driving long-term engagement and profitability.
EPS forecast and market reaction. Analysts had forecasted an EPS of -11 for Stitch Fix, but the company reported an actual EPS of 0.05 cents. How did the market react to this earnings surprise?
The market reacted positively to the earnings beat. Reporting a smaller loss than expected is a good sign for investors, as it indicates that Stitch Fix is managing its costs better than anticipated. This could boost investor confidence in the company's ability to execute its strategy effectively.
Does this change the overall sentiment towards Stitch Fix?
Yes, it does. Beating the EPS forecast suggests that Stitch Fix is on a path to recovery and could potentially return to profitability in the near future. This positive sentiment could attract more investors looking for growth opportunities in the retail sector.
Key takeaways. In summary, Stitch Fix's second quarter results show a company in transition. with a focus on improving client experience and operational efficiencies. Despite a decline in revenue and active clients, the company managed to beat EPS expectations and improve its gross margin. John, any final thoughts on Stitch Fix's investment prospects?
Stitch Fix is making significant strides in its transformation strategy, and the positive EPS surprise is encouraging. However, they need to address the decline in active clients to ensure sustainable growth. Investors should keep an eye on their strategic initiatives and client engagement metrics moving forward.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Stitch Fix's performance in the comments below. Until next time.